Let me just ask you a sort of broad outlook question on current business and trading. How are conditions?
They certainly are darker than they were when we started the year, right? We hoped that we would see the pandemic cede away, which seems to become endemic now, which is a real positive. But then when the war broke out in Ukraine, it became clear that lots of challenges come with that, from a food crisis, energy crisis, potential discontent in the street, a potential, milder stagflation, which is now the base scenario. So a lot of things have changed the last few months.
Any reason, what kind of visibility do you think you have at the moment? I remember we talked to John, of course, your CFO, back around the earnings. And it just seems to be, it's a very difficult question for a lot of CEOs because the range of possibilities from here on in is so wide. But at least there's some long-term thinking around insurance and the reinsurance sector. How much visibility do you think you have throughout to the end of the year?
I think the Ukraine war in itself, usually war is not covered in insurance. So we estimate this to be of the size of a medium-sized natural catastrophe event for the industry, which means between 10 and 20 billion US dollars. What will be more decisive for the industry is obviously inflation, because this touches the old reserves, and the financial markets, which in the US GAAP accounting standard go right through your P&L. So there's a lot of disturbance in this year and very difficult to predict it. Obviously, we're very committed to our financial targets, but it's very hard to predict now, being here in May, where the year will end.
Christian, there's a lot of concern, of course, about the economic fallout we're seeing at the moment of various events and the inflation, what have you. But I think we're going to lose track of some of the bigger issues. And you've already mentioned climate and the problems in the food chain and what have you. And they're made more acute by the fact that apparently we've degraded up to 40% of the land mass of this planet already. And that needs to be reversed as well. Climate change is not going away. It's only going to get worse and going to create more problems for the economy and indeed for your business as well, isn't it, potentially?
Well, it's a huge issue, and I think nobody in their right mind thinks that it's going to go away now just because we have other issues. So we have accumulation of issues. A lot of them require actually international cooperation, which in my view has suffered a lot through COVID. So everything is really interrelated. In terms of climate change for the insurance and reinsurance sector, the risk doesn't really rely with that sector because it can reprice every year. Most of the risk, which is the trend risk of how things get worse, remains with societies. So we're a warning force in all of that. We try to put a price to risk, but we're not the ultimate taker of the risk.
You say you can reprice every year, and I learned this after Andrew, when a partner of mine at the time was a reinsurance broker. So she was telling me how it works, and that was a long time ago. But the fact of the matter is, if you're having the scale of an Andrew Nat Cat disaster every single year, several times a year as well, will you be able to reprice effectively? Because you're going to have crisis after crisis, claim after claim. Would the repricing actually work for the industry?
So at this stage, that's not the base scenario, right? We see certain perils becoming much more frequent, like heat, drought, etc., and that is repriced. And these perils in absolute size are smaller than the big Andrew-type events. If you came to a situation like that, it wouldn't be insurable anymore, as you can imagine. The insurance and reinsurance industry would stop to work, basically, because something that happens every year is not an insurable event.